Deven Choksey too joins in on the show right now. Deven, hi, good morning. Good momentum in the market. Let's pick up on the defense sector because, the quarterly updates have been very strong, be it for Hindustan Aeronautics, Bharat Electronics, or Bharat Dynamics. What's your call on whether or not one can look to add, positions within the defense pack, even at the current levels?
Yeah, good morning, Aisha. Uh, on one side, we have got a very robust order book position for most of the defense companies, thanks to government's relentless program for putting more amount of business into India defense companies. Uh, they are having one of the best times probably I think that they have seen in their history, as we see it. And it is not likely to stop. It is likely to continue for next 3, 5 years. At least I think we are seeing this particular visibility, be it, I think, the likes of HL, be it likes of Cochin Shipyard. The names, I think, will keep on popping up, but the point remains that most of these companies are getting significantly large amount of order books. The key challenge, and that is a challenge that I always call it as a important challenge, execution. I think on one side, you have got a very robust order book position. Will you be in a position to execute more than 15-20% on a year-over-year basis as a growth? I think that's a question that I think one should be asking. And if that is not coming into affirmative, then possibility of the sustenance of the valuation of these companies would be, I think, really challenging. In my viewpoint, one will have to trade off very smartly in this particular activity. While the potential remains huge, execution is, I think, between 15 to 20% year over year basis growth. If that is an equation, then possibly I think the valuation will have to remain accordingly in line with this particular growth. That is what I would like to be.
Hi, morning. What's the take then on the newsmaker Aditya Birla Fashion? Now they're looking to demerge Madura Fashion and Lifestyle business into a separate listed entity, looking at separate listed companies. How are you reading into this move and the ones that have been previously being done by the Aditya Birla Group as well?
Yeah, good morning, Evan. Well, I guess I think two or three things that comes to me. About 20 odd brands portfolio is being hived off, and I think it is getting into a separately listed company. Uh, Nothing wrong with that particular process, but when on the other side, the big daddy Reliance Retail, when you see them, they are probably, I think, accumulating more number of brands into their portfolio. They have got the larger brands, they have got internet brands, they have got their own store brands. Each of these brand portfolios that they are creating, they're creating within the company. And here is another example where they're trying to, I think, merge this particular portfolio. One will have to see how exactly time proves them right. But in my viewpoint, I think till the time you grow the size, probably I think it is not easy for anybody to accept this particular argument that I think a smaller portfolio of 20 brands be given to a separate company. Only rationale that you can put across here is that this particular business is becoming extremely demanding as far as generating the higher return out of every brand is concerned. And that's where probably I think you require to put maximum amount of money behind it. So business is becoming also very capital intensive. Given that situation, maybe I think the Madura Madura is a separate now unit for sustaining the brand activity that they are basically talking about. But on the other side, as I said, I think the Reliance is basically showing a very different character, different model. They are putting significant amount of trust in their supply chain mechanics. They are putting significant amount of trust on the logistic management, putting in, I think, a good amount of trust on creating their own brand portfolio to get higher margins. So, all in all put together, I think they are achieving around 7.5% of EBITDA margin. And that's where I believe that I think they are creating a differentiator. So, I would remain more convinced with the Reliance retail strategy vis-a-vis the Aditya Birla fashion strategy at this point of time.
But in the meantime, let's also get in a take then from you, Deven, as to how you believe some of these consumer durables could perform. Analysts are talking about a very strong recovery due to a strong demand for cooling products. The Met Department is forecasting that it's going to be an above normal summer season as well, multiple heat waves. Which stocks do you see capitalizing on the back of this?
Yes, I think typically, I think this is the quarter where you are having the maximum amount of business for the white goods companies, and particularly the companies, as you mentioned, I think you are in the air conditioning segment. I think each and every company has their own business to talk about, be it Blue Star, be it Havels. I guess I think each of these companies, even for that matter, Voltas, though it's relatively I think, slow moving there, I believe that I think they are all talking about the growth in this particular 3 months, 4 months period. And given the kind of severe summer that we are talking about, the business condition could remain relatively more strong. If you if you keep aside this seasonality for the time being, I think where probably I think one is buying because of the season which is remaining very strong. I feel these companies have a very steady growth model to offer. On one side, our economy is growing at a nominal growth of around 12-13%. These companies, if they end up producing around 14-15% kind of year-over-year growth on a sustainable basis, I believe that I think they would probably be adequately giving the return to investors. Given that situation, for investors to make money out of these counters, I would think that the corrective price, I think, would be the best time to buy into. Maybe somewhere in the July to September quarter, maybe a better time to buy into some of this counter and stay invested for around 6-9 months to get the signal return out of this particular investments.
Deven, just wanted to highlight what happened with the auto names yesterday. And that, of course, was a reaction to the March sales data. But it was a below count, not just from farm equipment majors like in Escorts or, for that matter, M&M, but M&M overall as well fell short of expectations. Eicher as well, RE was sub-market expectations. That was the case from Maruti as well, and even Tata Motors passenger vehicles.
I think generally this particular month has remained, I think, little low and likely to remain lower, I think, in the month of April as well. Maybe April have Gudi Padwa coming up, so obviously I think at that time the sales might have some influence. But beyond that, I think due to the long vacation season, I would think probably that the demand would probably shift to some other months. And this is a typical trend. Vis-a-vis the passenger vehicles on the two-wheeler side, because of the marriage season happening in some parts of the country, we are likely to see in April and May the pickup in two-wheelers may be more smarter than I think the passenger vehicle. But what is more distinct and what is more promising to us at this point of time is commercial vehicle. We believe that the commercial vehicle journey is unfolding actually. I think it's beginning to grow. Each of the verticals, be it I think the transportation and the logistic related vehicles, be it defense vehicles, be it passenger vehicles like buses, or even for that matter, electric buses, and now I think like be on the road, the hydrogen powered buses. These kind of vehicles are likely to show relatively more stable growth going forward. And at the same time, I think we believe that the demand could grow, particularly for the logistic and the transportation segment for goods and cargo, largely because of the fact that the scrappage policy is coming into force. Infrastructure spending is on drive, and at the same time, a PLI scheme is resulting into higher amount of industry expansions. So all in all put together, we feel that I think comparatively commercial vehicle would be better off to the passenger vehicle at this point of time.
I want to pick up the Birla group of companies now. And it's interesting to see that suddenly all Birla group companies, especially which are part of the Aditya Birla group, they are in a overdrive in order to rebalance and check their capital allocation. It started with Grasim. They've started their cement unit in Panipat. Century Textile, well, this is a textile company. They've got legacy land bank. They're looking at developing land bank, and they are looking at becoming one of the top 3 developers in India now, real estate developers. Hindalco, well, they've already filed for Novelis IPO. Then Aditya Birla Financial Services, that is AB Capital, they are looking at amalgamation with an NBFC to boost their entire return profile and avoid separate listing of its NBFC, which means the holdco discount should start coming down. And last but not the least is Aditya Birla Fashion, where the underperformance I think is now very stark if you compare that with, let's say, a peer like Trent. And they're also looking at demerging Madura Fashion, which is a high margin cash cow business for the Aditya Birla Group Fashion, and put the other basket brands into a separate entity, which are still at an incubation stage, will still need a lot of debt and are not generating a lot of cash. So Birla is trying to do what, let's say, Tata's did in between 2019 and 2021, where they really change the capital allocation? Are they doing the same what Mahindra's did between 2020 and 2022 and 23 when Anisha took over as the CEO of Mahindra and Mahindra, where they reoriented the entire group capital good structure? They sold out loss-making businesses like Sangyeon. They looked at complete recalibration of all the businesses. I think the attempt here is very simple, that the Birla Group has realized that they really need to generate more shareholder value by taking hard decisions and taking logical decisions, scaling up businesses which matter, and looking at demerger. All kind of options have been considered here. Demerger of Novelis from Hindalco, NBFC goes back into the Aditya Birla Fashion, Grasim is looking at expanding cement capacity, they are moving into jewelry business. So are they trying to run too fast or too quickly, or this is reorientation of simple businesses with a grand new vision? Deven Choksey, jump in on this point.
Very interesting observation, Nikunj. And I must say that I think on one side, while they are trying to do their best in unfolding each and every business's potential, on the other side, I think there are few businesses which are generating cash and rest of the business are demanding cash. As you mentioned, I think in the retail business, I think the cash is being demanded. In telecommunication business, the cash is being demanded. In the new expansion that they are creating or taking care of, I think is in the area of paints. I think on the cement as well. I think for the cement expansion, the cash is being demanded. So the challenge is going to be that which is the one which is going to be generating at the group level significantly large amount of cash. I think the metal commodity to a greater extent, I guess, I think is the savior, particularly because of the Novartis's own listing, as a result of which I think the cash would be generated from the capital raise. In my viewpoint, I think it's going to be 2-3 years of good challenge that this group is going to be experiencing given the kind of unfolding of the businesses, I think that they've started doing to materialize its true potential, but they would require significant amount of cash. As an investor, I think you have to be prepared for, I think, dilution of your equity, given this kind of demand that they have to put money in each and every business, because it's going to be a capital expansion, where probably I think the businesses would be coming to the investors to raise money. We would probably carefully watch, I think, which most of these businesses and not immediately jump into it. We believe that I think let the cap scheme over, then after probably I think it would be better to jump into it for getting greater return out of it.
Choose between Adani stocks and Birla stocks for 2024. Which one would you choose?
Certainly, I think the Adani ones would be, I think, really clear because on one side you have got 80,000 crore worth of EBITDA, which is growing at a steady pace of around 20%, which is absolutely convincing. On the other side, the debt to the EBITDA ratio has actually come down to around 2.25 levels, I think, to EBITDA. So to a greater extent, I believe that I think this is one area where probably the infrastructure story is now generating cash, and the same very cash is getting deployed back into creating additional capacity stroke inorganic growth or the expansion that they are talking about. So I believe that I think be it road asset, be it port asset, power asset, and utilities, or for that matter, the new capacities which are coming up in the commodity segment, including the copper plant. I believe that I think these are the assets where they have the maximum amount of ability to now generate cash. Vis-a-vis, I think the earlier period of this group of companies where they have been consuming cash, they have been sucking cash. Now today, I think they're generating cash. So I believe that I think that is where probably the equations are certainly favorable, even from the timing point of view. Adani Group stocks will I think perform better going forward.
Deven, thanks so much for taking time out and joining in with your expert take.
If you like this video, then like, share and subscribe to ET Now.